Happy Friday, traders. This is Christian from Tribeca Trade Group. And yes, it is Friday, May 14th. This is your end of day and end of week video. We'll go through, obviously, today's performance. We'll talk about a couple charts. We'll definitely talk about the index charts in this video. We'll talk about, I also have, as I normally do at the end of every week, we'll go over the overall performance, what performed in terms of sectors, what did not, what underperformed, and we'll come away with some conclusions before we kind of wrap up the week, and then we'll talk about too, how you can be a member of Tribeca Trade Group. I will say this, just really just an amazing team of traders that we have at the Tribeca Trade Group. I'm just impressed. Just everybody posting some really good setups and working together as a group. It's not easy to do that when the market is really swinging around as it did this week. But it's something to be very proud of, that what we've developed over the last few years in terms of just a lot of different people specializing in different groups and different types, using various different technicals, and a lot of us using the MarketWebs and kind of getting on the same page and being able to kind of really find and pinpoint those really good setups. So we'll talk about that in a minute, but risk disclaimer in front of you: everything that we're going through is for information purposes only, not giving out any advice or recommendations. This video is for education purposes only, and if the video looks a little bit blurry, it's because YouTube has not finished rendering their high def video. I have just zoomed in here a little bit so you can see even when it does render the high def portion of the. So let's get right to that index performance for the day. Strong to quite strong, I would say. S&P up 1.5% for the day. Qs outperformed. Look at that, up 2.2% for the day. The Dow also underperformed just a touch, but that has been the one that's been kind of leading the way. So nice to see a little bit of rotation. We'll get to that rotation in just a second, but I want to go through the rest of the performance here. Dow finished up 1.1% for the day. Small caps also neck and neck with those with the Nasdaq, with the Qs up 2.3%. The bonds, which I don't have highlighted in here, we got a little bit of a relief bounce in the bonds. Gold and silver, they also finished up 1%, and and then finally here, the VIX, which is a big story of the week, down 18% for the day. Pretty crazy. So let's kind of just summarize the day's activity, and I think from a technical aspect, and from some of the things that transpired today, I think the market kind of got what it needed, right, in terms of multiple things happening. A lot of attention on these, more attention than usual on the economics. And today it was retail sales, and they came in, as I said in yesterday's video, listen, I thought that this number would come in hotter than expected, and it actually came in light. So I did not get that one right. I definitely thought the estimates were too low. But this kind of, why did the market rally on this number? Well, it just kind of it takes the pressure off, right? So the bad news was good news, right? We're back to that game, right, where the bad news is good news. People worrying obviously a lot about inflation, about what the Fed's next step is going to be, and when you have a weaker than expected retail sales, you could kind of chalk that up for a good thing in terms of the Fed saying, hey, well, we need to see good data. We need to see good data and consistent good data. So that's the story with that. Also, what I've been really talking about too, besides inflation, is the move in interest rates, right? So you get that relief rally in bonds, yields go down a little bit, and lo and behold, growth stocks can outperform a bit. So there's a couple different, that's not the, I know that there's some argument against that, but one of the things, there was a really nice article from Bloomberg out a couple days ago about, there are models, right? There are quantitative models that look at what interest rates do, and then they compare that to the multiples in stocks. And once it has a reading, there are institutions that make changes based on, how the interest rates compare to, like an earnings model. So I understand that there's also the counter argument that over time, higher small incremental changes in interest rates aren't that big of a deal. But I think if you look at the price action and over the last couple months, and every time interest rates go higher, it's been causing some issues for growth stocks. And pretty decent, pretty significant issues. All right, so that is one of the things that was good. That again, as I mentioned, that the market kind of got what it needed to in order to rally. And then from a technical standpoint, let's dig into some of the technicals here. But couple things, right? And a little bit of this is kind of after the fact analysis, so bear with me for a minute. But we did talk about, what did I talk about in yesterday's video? What did I talk about? Obviously, in the member, I send out what's called an S&P roadmap email detailing levels to watch, and this 50-day moving average, right? So not only, of course, do I look at the MarketWebs, right, and the indicators volume at price, which I think is so important, and I'll turn on the volume profile here too, so that you could see what it looks like on the screens, so that you could just kind of see how that translates. But not only that, I do also rely on the moving averages. Why do I rely on the moving averages? Because there's a lot of institutions that make decisions. There's a lot of traders that make decisions based on what happens with the major moving averages. Do you think it's a coincidence that we got right down to the 50-day moving average and bounced and held that perfectly? I don't think it's I don't think it's a coincidence. So that was very good. So before I go to the 1 hour chart, just to summarize this, we bounced on the 50-day moving average. I also thought yesterday that we got barely, we closed barely inside value, and we got some nice follow through. So you look at this chart now after where what we did the last couple days. The thing that stands out to me is price action is now back above all the short-term, back above all the moving averages, the 5, the 20, the 50, the 200. I don't have the 100 on my screen, but above that as well. So the trend right now is intact for the S&P. The uptrend is intact all over the place. We are inside value, which is basically where we started the month. Very close to actually where we started the month. So a lot of back and forth price action and testing testing the upward range and the downside range, right, in the S&P. So we are in value. Next week level to watch will be 4192 to the upside. Again, we spent a little bit of time, one day outside of one close outside of value for the month and back inside. Now, remember the other level that we talked about too, which is a virgin point of control, right? Notice that we took this thing out. Now we did go, it was a little bit tricky here. We bounced and then we took another leg lower, which again, what I refer to as very tricky. So we did go a little bit lower, but that 1 hour virgin point of control, if the way that I use that is sometimes I do position around it. And, if I got shaken out of some trades, then I look for the price action to kind of get back above. But that second attempt back above the virgin point of control really worked out very well, right? And again, virgin point of control is where a lot of buyers and sellers have previously met up, which is here, this volume profile that I'm highlighting with the cursor, right? So this volume profile, we draw that forward to the following period, and you could see that the price action did not even go through this value area, right? So that leaves behind it, basically an area where buyers and sellers have previously met up, and price action had not been returned to until this week, right? Obviously, we saw that here too, right? So that is S&P, and just to get a little bit more granular, when you look at this 5-minute, we'll just wait for the for Thinkorswim to adjust here. But I think that there was a virgin point of control taken out down here too, right? Which actually did mark the low. But I'm waiting for Thinkorswim, and so far it's not. nope, doesn't. And again, I'm going from memory. I thought that there was one here, but maybe there wasn't. Let's see. Sometimes you have to really go back far. I'm on 100. Oh, there goes these. So there were these that were taken out, but I'm mistaken. I thought that there was one more that marked the low. There's another one here. Again, it takes, when you go back 180 days, it takes a little time for Thinkorswim to generate the memory. Oh, you can see that we do have one down here, which we don't have to worry about right now. So I'll move on. But you could see it takes a while to crunch that data when you go back so far in history. So let's talk about the Qs for a minute. Right. So that was the S&P. Let's start with this daily chart. And we basically, so again, another virgin point of control marked the low. Right. That was on this chart. This is something that we went over yesterday. And I think the day before, saying, hey, a reasonable bounce could happen. So I think this is a little bit more uncertain, right? I feel a little bit more confident about the S&P and the technicals there. We closed right at this bugger. I should actually highlight this maybe a little bit thicker, this 50-day moving average, because I do view the 50-day moving average as very important. Let's see if I can do that really quick. There we go, make that 2. But yeah, we closed right at the 50-day moving average. So this is going to be interesting for next week, right? A major test. We closed right at that 50-day moving average, and we'll see. So what do I do when I'm a little bit more confident in some things? I position more in them. When I'm a little bit less confident, I don't have that many positions, or I take smaller shots in some things. So that's where we are, 50-day moving average. 1 hour chart. Let's talk about that too. Notice that this did rally right up until basically the bottom of value for the week. So we came upon some resistance there at the end of the day. But again, really, let's not take away from today's price action. You got to start somewhere, and this was really nice. This was really nice to see that movement off the lows for the Qs, and that move off of that daily virgin point of control takeout right here, right? And again, that's based on the volume profile from here. All right, so that's the index review. I haven't really been, I've been really solely focusing on the S&P. Or I should say the majority of my focus has been on the S&P and the Qs. The Nasdaq also, looked like it was possible breakdown time, similar to what we saw here, and we came back and, we got back above, back inside value. All right, so another save, and for now, for next week, 219.82 will be the level to watch. That's bottom of value. All right, so these levels are important, right? I do make decisions off of the levels, right? I scale down when we break a support level. I scale down. I don't usually go 100% into cash, but I definitely monitor my risk as we go along, right? And then I like to wait for that confirmation for levels to be taken out, like a virgin point of control, and to look for a reversal off of them. All right, so I mentioned we'll talk about the VIX, and a couple other things, but wow, look at that. I mean, we went up to, a 28 in the VIX from where we were, in the mid-teens. It's a big move, right? And it's amazing how quickly that volatility will kind of come into the market, right? So all the way up to a 28 and back down to an 18. Very, very fast markets that we dealt with this week, right, in terms of volatility. And it's tough. If you position in some options, it's tough to get those option targets when you've got that vol crush going on. So, trading a little bit more stock kind of helped me a little bit because I had a couple option positions on, and it's like, wow, these positions should really be up more. But you look at what happens with, when the VIX goes down 18%, you got to remember that the pricing of volatility is one of the components of the Black-Scholes option pricing model, right? That goes into the price of an option. So as stocks were going up, volatility going down, right? You have that kind of really kind of sucks out the price of the of the option premium when volatility goes down. All right, so let's talk about a couple other things here. Also a little bit of things that we talked about previously was the put call ratio. Right, so this was also right fear coming into the market, contrarian indicator, and I think we talked about this in yesterday's video. But this did act as another contrarian indicator. I always get challenges on this on Twitter when I put this out. It's very simple. You don't have to overcomplicate it, and I know that a big option trade of like a couple 100,000 contracts that go up for a penny can distort it. But when you look at overall option volume, when we do see this get stretched from one side to the other, it indicates complacency, right, when we're down here, and it indicates fear, right, which is up here. And when we get that fear in the market, it can often, not always, but it's often a buying opportunity, right? Because people are buying puts at the wrong time. Oh no, I need puts. That's just how it works over time. All right, so we'll move on from that. The rest of the performance for the day, just a couple observations. By the way, look at the oil and gas names up again. Clean energy had a nice day today. Blockchain stocks, all over the place this week, but finished positive for the week, even though down for the week. Biotech had a good week. Let's just jump into that chart just for a second. I think this biotech is also just like the Qs, right, at the 50-day moving average. Look at where biotech. It kind of gave us a little bit of a false move 2 days ago, but they really need to break that 127.30 level. And I would love to see biotech get going. And there are some names that are showing some strength. Regeneron is a name that a lot of people are talking about. This thing actually finished flat for the day, but when you look at the weekly chart, it kind of jumps out that this thing is trying to actually change trends, right? And there's a few other names too, which I don't want to go into in this particular video. But there are some other names that are starting to act well or show some signs of life in the biotech space. Finally, solar finished up big. So again, when you look at some of these areas, the FANG stocks, they were up about 3%. The semis. Let me just talk. I wanted to talk broadly about some of these sectors. SMH. This was our chart of the day, just as an indicator. I really wanted to see this hold 225 for the week. It did that, so it needs to build off of this. I like to see the semiconductors lead. They're still below the 50-day moving average, so that's kind of it's a positive and a negative. But I think overall, for what we want to see going forward, we got to see we got to see the semis get back above their 50-day moving average. The negative is that they're not there yet. The positive is at least we're not breaking down. Right, we're holding this level again, 225.57. So in this video, guys, what I like to do, this is a public video. For the member videos, what I do is I go more into individual names. Right, so I'm not going to do that in this particular video. But we've got a lot of setups. I've got about 5 or 6 names that I think maybe I'll go over 1 or 2 of them. But I think there's some good looking setups. I didn't really want to go heavy long into next week. But this is what you do. You compile a list, and you go from there. And the timing. If you're doing a bit of swing trading like I am, you've had to get the timing like really well. So let's talk about the performance for the week. Right, last week basically just about everything was up. This week, SPY, Dow, IWM. Even though today was a very, very nice day, all of these things finished down, it looks like, for the week. Qs were down 2.3%. Emerging markets, international developed markets, both down for the week. Bonds were down for the week. The only thing that was up here from like a macro standpoint was gold. Interesting. We talked a little bit about gold yesterday. Weekly chart does not look bad, right? Just a little bit more push, and it would trigger a buy signal on the weekly chart. Also, you got the big old 200-day moving average and a virgin point of control right in front of it. So that's kind of going to dictate what gold will, if gold is just bouncing and if it's going to get rejected, but it's got to get over that 200-day moving average. Now, if you look at some of the names, I think we went over two names yesterday, but one of them is Newmont. First, got to go to this weekly chart. First, weekly close above value year to date. All right, so that's 68.83. The other name that we mentioned yesterday, just different looking chart, Royal Gold, is deep in the middle of value. So, has some open road before you hit resistance on that weekly chart. But getting very interesting at this point. Something that really hasn't been. Newmont, we talked about Newmont. It was about back in here. Right, so this was about a little bit less than a month ago. Right, this made a nice move out of value, put together 3 or 4 days of a nice rally, and then stalled. But this has been moving very nicely since then. All right, so that's a little bit on gold. Best performing group, speaking of that, was GDX for the week, was up 1.1%. I forgot to go over the value and growth. VUG is growth, finished down 2.2%. So again, even though, it just shows you how, what the major difference was here for the week, because growth outperformed today, was up over 2%. And value was up 1.1% for the week. Finally, I mentioned this. I made a significant point in yesterday's video talking about how the ARK funds underperform when the market goes up and underperform when the market goes down. That was not the case today. They had a nice day today, up 4.9%. A chart that I put out earlier on Twitter is there's a lot of short interest. Right, the short interests, I'll bring up this again. But again, just something interesting here. Right, you look at the short interest ratio is now the highest it's been in a few years. I didn't realize that this ARK ETF has been around for a number of years. Obviously, really has gotten popular the last couple, but you got pretty significant, and this is a little bit stale, right? This short interest doesn't come out every day, but you got some heavy short interest in this thing at this point. All right, let's get back to the week's performance. Right, so value was up for the week. Growth was definitely not, even after today's move. Consumer staples, banks, financials, materials, biotech did actually almost squeaked out a game for the week. But, not any big performance here, but just what we refer to as outperformance. And then on the negative side, some things really got beaten up. Higher beta areas of the market, clean energy. The home builders really got hit. Chinese internet names, even though they rebounded a bit today, still down 5% for the week. So, yeah, there's still a lot of problem areas of the market. So I don't think, I hate the expression out of the woods, but there's just some areas that look extremely troubled. Right, Chinese internet names are one of them. Okay, so let's talk a little bit about So I said I would go over one or two setups, right? Right, you'll kind of see this when I go over some of my names. But look at this Schwab, right? A name that sees a lot of option positioning in, right? Spent a good portion, moving down. So I wanted to talk a little bit about strategy, right? Which I think is so important right now in this market going back and forth. Here's the trade blotter for what I did today. It was a little bit more active. I liked the breadth. By the way, look at the breadth on the bottom of the screen. This is one of the best breadth days I've seen in a long time. Look at the stats. Sorry, I'm going back and forth here, but it's the end of the week. It's been a long week. But you could see that the S&P had 431 advancing names, 74 declining. Look at the Nasdaq, 2,472, 428. So this was pretty strong breadth because we do use in our indicator volume as well to incorporate that in there. And I haven't seen a plus 8 on the NYSE side in a while. Same thing with the Nasdaq numbers. Really, really good numbers for the day. Right? And also good volume. So you could see that too, that obviously that translates one and the other. All right. So my strategy for the day was, yeah, I tried to position in a few things. Uber was a really nice day trade for me, right? I was in the May 46 and a half calls, took these off for last target was 180. It's nice, that's nice for a day trade. SE, went long some stock. That worked well too. I kept taking kind of quick targets. And then a few other things. The Summit trade worked out very nice. Right, you got a breakout there. Actually ended up at 34.47. So very nice. Nice little, you know, break out of this trend line too. There we go. How nice is that? Of course, earnings was kind of in the middle of that, but really nice move. So yeah, so let me just talk a little bit more about. So these were some of the other things I put on an XLF trade. I decided to take that off and kind of substitute into some other things. But I think still for me, being very mindful of how many positions I have on, the position size. This market really, if you kind of made it through this week okay, you had to be very quick. I didn't add much risk the end of yesterday. And partially that was because, I was looking for a move like a rebound in growth earlier in the week. And when I didn't get it, I kind of got stung with a couple positions. So it's tough to try it again and again if you get stung a little bit. But the main thing for me was, I had the appropriate size positions on. So, while I got stung a little bit, and there were a couple names too that I took off a portion of the trade for profits. But it really just kind of kept me in the game where I didn't really have to dig myself out of a hole. I hate to be in those positions. It's something that I've gotten better over the years. Is when the market goes down, just not putting yourself at a really disadvantage. When you're in a disadvantaged situation, sometimes you make bad decisions, right? You do bad things. So now on the flip side of that, I traded very disciplined this week. I had a couple paper cut losses, and a couple of these paper cut losses ended up being, they turned around and I kind of missed the upside. But I'll tell you what, it just, it keeps me fresh, and also being able to sleep at night. This was a trade that I took off yesterday. It was kind of, hey, let me see if it will work, and if it doesn't, I'll take it off. Well, it didn't. It ended up not working the other day. But ASML looks, this is good. This is a stronger looking semi right now. Applied Materials was another name that I got that I had tried and bailed on. So again, it's okay. It's not that big of a deal. To get stopped out of a position, you just go back and you reassess. All right. So that's the story with a couple names, but you live to fight another day, right? And if you have to take off a position and put it back on, it's no big issue. So going forward, right? And I'll kind of leave it here, in a bit on a positive note. But I still, I'm starting to see, of course, and it helps when you have a nice day like this. But out of those stronger areas of the market, seeing some really good setups, right? I'll leave you with one, right? And I just started a position in this, but again, the chemical names in the material group, very, very strong, right? So I'm looking for a breakout here further, right? A name that I put on yesterday. Not a huge day, but it looks like it's going the right way. We talked about Schwab. This is another one where I positioned appropriately. so that I could withstand some shake and bake here, right? And this resolved higher. So again, putting on the appropriate position where you can kind of stay in a trade also helps, right? And perhaps those two examples with the semis, were not executed perfectly, because if they were executed better, then I probably would have been able to stay in a small portion of the trade. But like I said, I'm okay with that. All right, guys, that's it for this particular video. Guys, have a great weekend. As I mentioned, to be a member of Tribeca Trade Group, you can go right to the link here that I have on my Twitter page, and you could see all the details about what you get. But obviously, we do a lot of commentary during the day. We went over some setups this morning too. That worked pretty well. We talked about Las Vegas Sands and the casino names, right? So we do that every morning at 9:05, and then we also do chart reviews, member chart reviews, a few times during the week, midday. But look at this Las Vegas Sands, up 3.8%. Also, I like the Caesars chart, right? Not extended, broke above value. You know where it's going to work, where it's not going to work, which would be 97. All right, guys, have a great weekend, and I'll see you on Monday.